ultimately, it's going to slow down the economy because the need to get approvals from the government to do things, whatever it is, slows down. You talked a lot about the FAA. Will flights slow down when people stop traveling? And so I think the idea is that it will have an effect. The actual number of government workers, and we as a company, a lot of my colleague companies, do the same thing we do for people in any other difficult situation. Less growth than they would have had 6-9 months ago, and reflects the impact of the tariff war and the trade and all that. But they still think we continues to grow. And we're growing at a slow rate, say 1.5% this year, a little more next year, and a little more the year after that. But it'll take inflation for the Fed to get inflation out of the system really through the end of 26 into 27.
It's happening again. America's economy is standing on the edge of another political cliff, and this time, the warning isn't coming from a politician or a journalist. It's coming from one of the most powerful bankers in the world, the CEO of Bank of America, Brian Moynihan. He's not mincing words. He's saying, in plain English, that the US government shutdown is already starting to cripple the American economy from Wall Street to Main Street. And when a man who controls one of the world's largest banks says that, it's time to pay attention. Because Moynihan isn't a man who throws around dramatic language. He's known for being calm, analytical, and measured. But his latest comments are a red flag, a sign that something much bigger is brewing beneath Washington's political theater. The US is now deep into its government shutdown. Day after day, the standoff continues. Federal offices are closed. Thousands of government workers are furloughed or working without pay. And basic operations from national parks to financial regulatory agencies have ground to a halt. But what most people don't realize is that this isn't just a Washington story. It's a Wall Street story. It's a small business story. It's a family story. Because when the government shuts down, it isn't just politics that stop, it's the flow of money, the pace of approvals, and the confidence that keeps the economy moving. And that's exactly what Moynihan is warning about. He said the political fight over the budget, what seems like just another partisan deadlock, is now spilling over into the real economy. Companies can't get government approvals. Deals are stuck waiting for signatures. Even something as routine as IPO filings at the Securities and Exchange Commission, completely frozen. Think about that. The biggest driver of financial growth in the US, new companies going public, raising money, expanding, is now on hold. Moynihan's own company, Bank of America, has been one of the biggest beneficiaries of the recent IPO boom. In the third quarter, they had a great run, massive deal activity, strong M&A, big advisory revenue. But he's now admitting that this next quarter is going to tell a different story. Why? Because the engine of capitalism, the government's ability to keep the system running, has hit a wall. And here's where it gets deeper. He said, ultimately, it's going to slow down the economy. Because they need to get approvals from the government to do things, whatever it is, and it slows down. It's a simple statement, but it captures everything that's wrong with Washington right now. The endless political fighting isn't just frustrating, it's expensive. Every day that passes without a resolution is another day that confidence erodes. Travelers cancel plans. Companies delay hiring. Investors pull back. And as Moynihan reminded, the shutdown doesn't just hurt big corporations, it hurts real people. He revealed that Bank of America has between 250,000 to 300,000 government employees as customers. Many of those people are now missing paychecks. In his words, "We do for them what we do for anyone in a difficult situation: fee forgiveness, loan forbearance." That's a powerful statement, but it also shows just how deep the problem runs. When one of the largest private banks in the world has to start stepping in to help federal employees survive, you know the system is starting to break down. And Moynihan's concern isn't just about today. He said the longer this goes on, the more parts of the economy it touches. The ripple effect spreads from travel to housing to credit markets. He said, as it goes on longer, it affects more parts of the economy, because activities that need approvals, need things getting done, can't get done. That's the real warning. Because once confidence starts to slip, recovery takes much longer than politicians expect. Let's put this in perspective. The US economy has been running on tight margins for months now. Inflation has slowed, but prices are still high. The Federal Reserve is cautious, but interest rates remain elevated. The job market is cooling. and global uncertainty from the Middle East to Asia continues to weigh on investors. Now add a government shutdown into the mix. The message to the world becomes simple: America can't govern itself. And that perception alone can do more damage than any single policy. When Moynihan talks about the malaise that develops, that slow, creeping loss of confidence, he's describing something every economist fears. Once people stop spending, once companies start delaying projects, once hiring freezes begin, it's like pulling oxygen from the system. And the longer Washington keeps fighting, the harder it becomes to restart the engine. He said, if a malaise develops and people slow down spending, that's an issue. If employers start to say, I have to adjust my headcount faster than I would otherwise adjust, that's an issue. These aren't hypotheticals, they're early warning signs. And it's not just the shutdown. Maria Bartiromo pressed Moynihan about something else that's been shaking investor confidence lately: the growing number of bankruptcies and credit concerns in regional banks. He admitted there have been some alarming developments: companies collapsing, potential fraud cases, rising defaults. But he also clarified something that many people forget: credit is normalizing. During the pandemic, consumers got a massive financial cushion: stimulus checks, relief programs, low interest rates. That led to record low credit losses. Now, as all of that fades, the system is returning to something like 2019 levels, still healthy, but more realistic. He said, credit quality got much better after the pandemic. Now it's moved back up to where we are today, relatively close to 2019. 2019 was a 50-year low for credit costs. That's a critical point, because while the media focuses on panic, the reality is more nuanced. The economy isn't collapsing, but it's fragile. And the shutdown is the kind of shock that can tip fragile systems into real crisis. Then came the next big concern: commercial real estate. Remember that? The sector that many predicted would collapse after the pandemic? Moynihan said that back then, everyone was warning of massive write-offs. But now, while there are challenges, the banking system is stronger, better regulated, and more diversified than before. Still, there's one thing that keeps him up at night: private credit. The rise of massive private lenders, companies like Blackstone and Apollo, has changed how America's financial system works. These firms now lend billions outside the traditional banking system, often to riskier borrowers. Moynihan said this has become a competitive risk for banks. Why? Because private funds can move faster, offer different terms, and take bigger risks, but they're not regulated the same way banks are. He explained, it's a competitive risk for the banking system because, at the end of the day, if you look across things that make the banking system what it is, it's the ability to take deposits and make loans. In other words, banks are playing by one set of rules and private lenders by another. And when crises hit, it's usually the banks that get blamed, not the private funds. This is where Moynihan's warning connects. The dots. The shutdown, the regulatory uncertainty, and the growing power of private credit all point to one reality: America's economic system is becoming less predictable. Investors are losing confidence not just in Washington, but in the overall framework of stability that used to define the US. And when confidence fades, markets don't wait. They react. Moynihan made it clear that Bank of America is strong, well-regulated, well-prepared, diversified, but he also acknowledged that the environment around them is shifting fast. He said, the banking system is well-regulated. Stress tests show what the risks are across all assets. The system is strong. But outside the banking system, there's the ability for more flexible terms. That's an investor question. Translation. The banking system may be safe, but the broader economy, especially the parts operating outside traditional finance, could be vulnerable. So what happens next? If Washington continues its shutdown, expect ripple effects in stages. First, consumer confidence will drop further. Then, corporate activity mergers, IPOs. Hiring will slow. Next, lending and spending freeze up. And finally, the real economy, jobs, wages, small business growth starts to feel the pain. And that's exactly what Moynihan fears most. Not a sudden crash, but a gradual suffocation of momentum. Because make no mistake, America's strength is built on confidence. It's not just about GDP or debt ceilings or political fights. It's about the belief that the system works. And every day the government stays closed, that belief erodes a little more. And that's where we stand, a government frozen, markets slowing, and ordinary Americans paying the price. As Brian Moynihan said, this isn't just politics anymore, it's personal. Every day the shutdown drags on. More families, workers, and businesses feel the pain. The question now isn't who's to blame, but how long America can afford to wait.